Hi everyone, hope you guys are all having a great day today. In today's video, I'm going to cover the whole entire market in terms of Dow Jones, Nasdaq, and S&P 500, including the economic calendar. Now, I do post these videos daily, so I highly encourage you to double check the latest video on my channel so that way you get the most up-to-date information. And I'm going to go over the economic calendar first before I get to the technical analysis portion. And for Tuesday, August 27, 2024 at 9 a.m., we have S&P Case-Shiller Home Price Index, 20 cities. And then at 10 a.m., we have consumer confidence. Now, one thing to note for this week too, though, is we do have PCE inflation numbers coming out at the end of the week on Friday. And that is somewhat important because the Fed did already state for the most part that rate cuts will be coming in September. And then Jerome Powell signaled that this is the time now to start having rate cuts. They didn't specifically say 25 or 50 basis points. And I have a small correction from 2 videos ago, I believe. Jerome Powell kind of more hinted at the 25 basis points, if I'm not mistaken. And this PC inflation number is regarded as more accurate versus the CPI and PPI inflation numbers. So this is still important because they're assessing the data as it comes in for the most part, even though that they indicated that rate cuts for the most part is pretty much starting off right now as we move forward, right? Now, that doesn't necessarily mean it's a good or a bad thing for the markets, because technically it is a good thing for the markets, because when they cut interest rates, then more money could be pumped into research and development for companies because money becomes cheaper to borrow. But then sometimes from the past, it's signaled that when rate cuts happen, corrections tend to happen more often than not right after they start rate cuts. But it is what it is. We'll see as we keep moving forward. But essentially, it should help out companies. But at the same time, it is just 25 or 50 basis points. It's nothing crazy for the time being. But over time, if it continues, then money becomes cheaper. And if money becomes cheaper, companies tend to borrow more money for research and development growth of the company. And the reason why that's beneficial is, let's just say interest rate is at 1%. Well, a company usually tends to believe that they could get more than 1% return on the money they borrow from investments in growing the company. So therefore, it's worth it. But when interest rate is too high, then they don't want to take the risk. So if interest rate is about 7% to borrow money, then that becomes a high risk to borrow money and essentially try to get more of a return versus the 7%, if that makes sense. Now, in terms of the S&P, Nasdaq, and Dow Jones, I'm going to go over the S&P first, then the Nasdaq, and then the Dow Jones. And one thing to note is essentially it's kind of interesting how they're all almost at the upper limits, almost in a way. And what I mean by that is for the S&P, it's pretty much at the all-time highs level. For the Dow Jones, pretty much at the all-time high level as well. And for the Dow Jones, or the Nasdaq, sorry. So the Dow Jones and S&P are at the all-time highs. But for the Nasdaq, it is at a level since 2010. And that level, we've had issues passing it and we would get knocked down. I'll visually show later on. And being at those levels all at the same time, plus the MAC line indicating somewhat potentially a pullback, potentially. The reason I'm saying that potentially is because we have NVIDIA earnings coming up in 2 days. And that is important because it is a mega cap stock. It's in the $3 trillion market cap ballpark. And if they do beat earnings, which they are expected to, the problem is there's a small potential that they might not necessarily miss, but not deliver as much as the market would hope for in terms of expectations and all that stuff. Because, for example, one of their chips was delayed for 3 months for delivery based off a potential issue that they caught. And then people are wondering how that's going to play out in terms of the forecast and so on and so forth. So if they do beat their earnings expectations and the stock does end up going dramatically to the upside, given it's a mega cap stock, in my opinion, will break through the levels in terms of the levels I'm going to be mentioning. Not specifically for the levels I'm mentioning, but in terms of more upside. That's what I should clarify. And these levels will not be an issue. But if it ends up coming down, then we could see the market getting pulled down with it, in my opinion. Because given how it's a mega cap stock and essentially not being earnings could be somewhat of a bad signal. The only thing is, though, the reason why I don't think it's much an issue personally is because everyone knows pretty much these chips that NVIDIA is selling is in high demand. So given how much high demand it is, even if it does see a pullback and then the market will come down too as well, in my opinion, then that will be short-lived and then be reversed. So there's that. But that's enough for in terms of that, talking points. So in terms of level, the reason why I'm going to visually show, actually I'm going to visually show all 3 levels that I'm talking about and then break them down each. So for the S&P, I'm looking at ETF SPY, which is an ETF for the S&P 500, and it's just the same thing, just different ratio. Mind you, we closed at $560.79, and this is pretty much at the all-time high level, and it's having issues breaking through it. Now, there is spike ups in terms of the pre-market and after hours and all that stuff, so on and so forth, but if you go to the alt chart, you can see we're at the all-time highs, and we're having issues pretty much breaking the level for the most part, right? And that's given pretty much at $563, $564, and then $565 if you're counting pre-market after hours, right? So that level, that's where we're at for the S&P, right? Now for the Nasdaq, it's almost basically the same thing. This line is basically since 2010 in terms of upward trend resistance line. So if I go back the 5-year chart, up since 2010, right here, about here, upward trend resistance line. Mind you, the market was still going up. It doesn't mean it's not going up. It's just more stuck underneath this upward trend resistance line. Did break through in 2020 to 2022, and then came back underneath it, tried to pass it, couldn't pass it, then did pass it, and then came back underneath it as of recent. So if I go back to the chart, this is the line, and you can see, yeah, we have a couple small false breakouts, but we're having issues passing it once again, right? Mind you, we did have a small peak up and then came back down. Now, the thing is though, because the MACD lines are indicating further downside potentially, I would disregard them because earnings is coming up for Nvidia, but just to let you know that technically if there's no major catalyst to bring up the market, technically it's indicating downside, technically. So that's for the S&P and Nasdaq. And then for the Dow Jones, a little bit slightly different, but almost the same thing. So essentially this is the all-time high for the Dow Jones right about here previously, back in roughly July of 2024. And if you go to the all chart, you can see all-time highs, so on and so forth. And we did test it today, right? So we actually went up to it and then came back down, and essentially having issues to break through it fully. And the Dow Jones also is indicating further downside. The only reason why I'm saying it's not exactly quite similar as the S&P and Nasdaq is later on it's potentially looking at a small dip, but it almost shows a faster recovery for the Dow Jones versus the S&P and Nasdaq based off MACD lines. Again, if there's a major catalyst, then the MACD lines are thrown out the window, basically. You could almost disregard them. But if the market continues as the way it is with no catalysts for the upside and downside in terms of dramatic moves, then I would more look at the MACD lines personally, right? And if you're new to the channel, just to indicate what MACD lines are, it's right about here. And it indicates if we're in a bearish or bullish movement. Arguably, it's still in the bullish movement, but it's going to pretty much get pulled down into the bearish movement for the most part. It's pretty close. They're not guaranteed that it's going to have to, like you've seen here a couple times. Let's see, potentially right about here, try to cross over to the bearish movement, but didn't went up to the bullish movement still, right? So it's not a guarantee, but it's possible. Now, we have the VIX a little bit slightly higher at 16.14 points, went up 1.83%. And then again, in terms of breakdown, let's go through all of them. So first looking at the S&P 500, looking specifically at ETF SPY, again, $560.79. And if we go lower, for the time being, because Nvidia is expected to do an earnings beat, I don't expect Nvidia to drop so significantly. So I'm more looking at this zone right about here as support, which is pretty much somewhere between $556 and some change, all the way down to $555 and some change. We kind of saw that earlier too, the other time back in August of 22nd. And then if it does get pulled down dramatically, then we could rely on potentially this moving average right here to hold about 549 and some change. And then it coincidentally falls into a perfect zone somewhat as well at 548 and some change, give or take. So 549, 548 and some change. I don't expect anything crazier in terms of downside personally. Again, because you have earnings for Nvidia coming up 2 days out, like within the next 2 trading days, which is Wednesday after hours, by the way. Now for the upside, again, we have to pass the all-time highs, which is about 563, 564, and then 565 if you're counting pre-market after hours price point. And then that's the cap for the upside. For Nvidia, it's a little bit, or not Nvidia, for Nasdaq, it's a little bit different. Now this upward trend resistance line dating back since 2010, like I showed earlier, if you were thinking that it's going to go test it, you're looking at resistance about $484 and some change, give or take. Now the longer we take, the higher the high will be. Mind you, close at $475.34. And even if we were to go up, we would meet resistance at the moving average anyway, about the 470 and some change. Probably by the time we get to it, it'll be 480 and some change. And there's that level. Now, you could probably argue that there's going to be some resistance at 481 anyway and some change, because horizontally, if you look at 481, there's multiple touch points across from it. But then to the downside, you could expect support at the 474 and some change. And you've seen multiple times, pretty much it's hovered around the 474, 473, give or take, and some change. And then the next level will be the moving average, about 468 and some change. And then in my opinion, if it were to fall down dramatically, you could expect potentially a support at the 465 and some change, but ultimately it'd be 460 and some change if it gets pulled down dramatically. Again, I don't expect that. There's a chance that it just might, because it's going to have to see some downside pull, because this 474, even though it's on it right now and there is decent support at the 474, it has, in my opinion, probably has to hit the moving average at least, which is about 468 and some change, 467 and some change, give or take. So there's that. That's for the Nasdaq. Again, I looked at QQQ ETF for Nasdaq. Same thing, just different ratio. Now for Dow Jones, this one has to, in terms of the higher level, pretty much has to hit 41,400 points, give or take, for the all-time high. Mind you, closed at 41,240 points. And then to the downside, you could potentially expect support, potentially. I guess at the first level, it would be somewhere around the ballpark about, well, obviously 41,000 clean. So 41,000 clean, I would say, for the most part. But then essentially coming down to the moving average, about the 40,900 points. And then this downward trend resistance line that could act as support, which we saw bounce off as support as well. So by the time it comes down to it, you're looking at 40,000. It's showing 40,790 points, but 40,800 points, give or take. And then ultimately, not ultimately, but potentially coming down to this upward trend resistance line that has been acting as resistance since 2021, right about here. Multiple touch points as resistance, and this breaks down to even more touch points when I zoom in. That would be acting as support potentially on the way down, and that would be potentially, if you're expecting it to be as support, would be about 40,480 points, give or take. And then this moving average, just to give you a read, would be about 40,260 points, give or take. Or I would say more specifically 40,250 points, give or take. And that's basically it for today's video. If you guys found it beneficial, consider dropping a like. It does help out the channel, so thank you so much for that. I do appreciate it. I do post these videos daily, so I highly encourage you to follow and subscribe if you want to be notified when I do upload my next video. And that's basically it. Thanks again for watching. I appreciate it. Take care. God bless and peace.